QuickBooks Pro Desktop 2021. Bank Reconciliation Month 1, Checks and Cash Decreases. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the Open Windows open. You can open the Open Windows by going to the View drop-down, selecting the Open Windows list. We're going to continue on with our bank reconciliation, starting off by opening up our balance sheet. To do that, let's go to the Reports drop-down. Let's go to the Company and Financial and on down to the Balance Sheet Standard. We're going to change the dates up top by customizing the reports from 01/01/21 to 01/31/21, January through January 31st, January 1st through the 31st, 2021, and okay. Here's what we have. We're concentrating in on the checking account and comparing that to the bank statement. Here is the bank statement or the mock bank statement that we have. You might have this in Excel worksheet or in a PDF, or you can just follow along here. Last time we have been reconciling the deposits. We're going to move on over to the checks and other decreases to cash this time. Let's go back on over to QuickBooks. Let's open up the bank reconciliation. We have been starting it in the prior presentation. If you missed that one, you're going to want to check that one out first because it's like half done right now. We're like in the middle of it. So we're going to go to the banking dropdown. We're going to reconcile, and we have this filled out. It should be saved now because we left it last time, and that's the nice thing about QuickBooks. You can leave it and then go back into it without completing the bank reconciliation, so you can go to lunch and turn off the computer and whatnot. So we're going to say continue, and we had reconciled last time the deposits side of things. Now we're going to move on over to the checks side of things. Usually the longest and most difficult kind of side to do is this side. So we're also going to be hiding the transactions. Notice the transactions in February have reappeared. We don't need to see those, so I'm going to hide them up top by selecting this item up top. Now we're going to do the same type of comparison. We're going to be going from our bank statement and comparing from here to the books. From here to the books. Why? Because we expect everything on our side, on the bank statement, I should say on the bank side, to be on our books. But everything on our books, we do not expect to be on the bank statement. So therefore, it's going to be easier for us to go to the bank from the bank statement, or think of ourselves going from the bank statement to our books. And then we'll be left with some things on our books that will not be on the bank statement. Those will be the reconciling items. So let's do that as we go here. So we're going to start off with these two items. Now, the 2,600, the 2,400, I suspect those are not going to be on our side of things because I suspect that that's part of the 30,000 minus these two items beginning balance that we talked about last time. This is a problem that you may often have when you first start the bank reconciliation or do the first bank reconciliation in a new system. So in other words, that 30,000 minus this 5,000 equals the 25,000, which is going to be the beginning balance here. So it's included in that beginning balance. So I don't see those two items in our side, and we're going to have to basically deal with that. We'll talk about that at the end, but I'm going to verify that by checking everything else off. So then we're going to go to this one and say, okay, there's check number 1001. Now, if we have checks, like a check number, if we wrote check numbers, that check number is really nice as an added reference because we cannot rely as much on the dates. So in the deposit side of things, we can kind of rely on the dates because they'll be pretty close to when they actually clear the bank. But on the checks side of things, that's not necessarily the case. We might have written a check today. It might take a month or more than a month, to clear as someone else holds on to that check and doesn't cash it for a long period of time. Now, many companies these days will not be writing as many checks and might be doing more electronic types of transfers, paying their bills online and whatnot. And that is going to be similar to the deposits in that we don't have the check number, which isn't as nice, but we do have the dates should be similar or closer in range if that is the case. And we might have some added information on the banking side of things related to the vendor to tell us who we're going to pay. In other words, if I want to know who we paid when we wrote a check to somebody, I can get the information for the canceled check and actually look at the canceled check to view the check. I would copy the check that was written. However, if it's an electronic transfer, they often give that in the description, so I can go to the bank and basically look up the description, and that might be easier. And if you're using bank feeds, then that information might be populated in your books as you go. So in any case, those are the pros and cons here. So we're going to be using the check numbers. If you write checks, the check numbers are a useful tool because, again, the dates are not as reliable. So here's the 12,000. I'm going to go back on over here, and we're just going to check these off. We're going to say 12,000 on our side is here. Check 1001. I'm going to make that green. So I'm going to say, all right, we found that. Let's make this whole thing green. Let's make the whole thing green. Check 1002 for 16. So now we're going to go back on over and say, all right, 1002 for 16. And then I'll go back over and make that green. So I'll select the entire thing, right click, make it green. 1003 for 7,000. So there's the 7,000, 1003. Going back over, we're going to make it green, right clicking on it, greenifying it. And then we got 1004 for the 20,000. So there's the 20,000. So that looks good. Going back over, we're going to greenify that. Also note that you might have differences in terms of how your bank orders these things. They might order it by bank or by date, or they might order it by check number. And you can kind of adjust the ordering over here. You can see if you can adjust the ordering. But you want to, so I could order it basically by check number, or possibly by date, or by payee if I so choose over here. So you might want to think about how you could line up the ordering from your bank statement to your books. So then we have the 5980. So there's going to be that item. And so that looks good. So I'm going to greenify that. And then we got 1008 at the 620. So we got the 1008. Let's see. So that one is the 1008 at the 620. Okay, so notice we skipped a couple there. That's kind of normal. That's why we're going from the bank statement to our books. And then we got the 1010 at the 15. So 1010 at the 15. So there we have it. We got them all checked off. And so that is this one. And then we have these two items down below that we'll have to deal with. I wouldn't expect these to be on our books possibly, unless we recorded them. The withdrawal we should probably have on our books, but we don't. And the bank service charge. So those aren't going to be on our books. Over here, what is on our books in January and are not on the bank statement, we're okay with that. We expect that to happen. Why? Because we're going to say, okay, these guys must not have cashed the check yet, and or it must not have cleared our bank yet, so it's not on our bank statement in January. How can I check and verify that these things are okay? I mean, have I paid these people then? Well, we can go into our bank account and check it in February. We expect to find those cleared, but not in January, but in February. So if they're cleared in February, what's the big deal? Why do this process? Because by doing this process, we can tie out our balance as of a specific point in time and reconcile it to the bank balance. And by doing that, we can verify that all of our data input is correct. So that's going to be our point here. So we're okay with these being outstanding, and we can double check that they have cleared. They just cleared in February most likely, and we'll see that when we do the February bank reconciliation. And then we want those now to understand what the reconciliation is, and if we reconcile periodically, then we will be able to verify that we have recorded everything. Now notice we're off by this 165. That 165 should be these two items, the 165. So now these two, we just need to add these two items. So these are withdrawals. I'm going to assume that the owner took money out of the system, took a withdrawal here, and this one is going to be a bank service charge. So let's just go add that. And again, if it's on the bank and it's not in our system, then that means we're going to basically need to adjust. We're going to need to add it to our system. So that's what we'll do now. So I'm going to go back on over, and you could leave, or you can keep this open. I'm just going to open the register now. So I'm going to you can go to the lists, chart of accounts. I'm going to double click on the checking account, just opening up the register. And I'm going to put these in, both of them as of 01/31/21, the end of the month. I'm going to say it's not a check, so I'm going to say like other here. Now the first one is a withdrawal. If you're working with somebody like a company, if you're a bookkeeper working with a company, withdrawals are not good usually unless you have a good system of how you're going to deal with them. In other words, normally you'd like to be able to say, as the bookkeeper doing the work, or the accountant that's putting the stuff into the books, you'd like to say, hey, owner, whoever's taking the money out, I would assume that everything that you take out, that it's just cash that you're taking out of the business, is I would like to assume that it is for personal use. You're taking a draw out of the business for personal use. But if I can't, can I assume that? Or are you taking money out of the account for cash and using it for business usage? And if they're using it for personal use, then I can just put it in as draws, and I would want to put it in not as an expense, but instead as some kind of equity account, so it doesn't affect the income statement. But if it's something they used in the business, if they're saying, hey, I took that money out and I used it in the business, then you'd want to say, well, okay, then how am I going to know like what you used it for? Because I need to categorize it. And hopefully at that point, if they do use cash to pay business expenses, if they pull out cash out of the bank, use it to pay business expenses, they're going to have some system to tell you where to categorize it. And if we don't have any system to tell you where to categorize it, then we're going to need to basically just put it into an expense account that will be a miscellaneous expense or other expense, or assume it's office supplies or something like that as we do so. So again, what you want to do is say, hey, look, don't pay things with cash unless you have to, right? Pay things with the credit card, with the business credit card if you need to, or with electronic transfer or something like that. Then we can do the bookkeeping, and I can categorize it just basically based on the vendor name. But when you take cash out of the bank, if you're using it for personal use, fine. I can just assume it's a draw and put it to equity. But if you're using it to spend in the business, spending cash for the business, then that's going to be difficult. We're going to have to come up with some system to tell me what it is. So for this month, I'm going to assume that it's an expense. They told me, okay, it's an expense. I used it for an expense, and they didn't tell me what it was for, so I'm just going to put it to miscellaneous expense. And then we're going to compare that to what we'll do next month, which is we're going to treat it as a draw, which is what we would like to do, meaning it's what the owner took out for their personal use. So I'm going to put it in like the miscellaneous expense here. So I don't really know the vendor here. So I'm going to say it's going to be for the amount of 150. It was 150, and I'm going to just call it miscellaneous. I'm going to look in our chart and I say, how about is there a miscellaneous? Let's try typing it in there. Miscellaneous. No. I'm just going to type in miscellaneous expense. I'm going to abbreviate it so I don't misspell it. And I'm going to say tab and quickly set it up. And this will be an expense. I am going to record it as an expense as opposed to draws, which we would record as an equity type of account. So this will affect net income. I'm going to say save and close, and we'll record that. And then the next one, which is also other, is now going to be service charge. So I like to put this in, myself, the bank service charge, and it could be the bank, whatever bank we have. I won't put the vendor, but whoever the bank is, we might put that there. But I'm just going to put the service charge of the 15, and that is going to be, let's see if they have like a service charge, like a bank service charge. There it is. So they have that. Now, again, it might be fairly small, your service charges. So you may not even, you might want to include it in miscellaneous or something like that, because they could be very small for a small company. Might not have a lot of bank service charges, hopefully. But I like to break them out even if they're small. I like to know what the bank charged me. So I put it into another account. And I'm going to say, okay, let's go back into the reconciliation here. And now we have those two items. There's the 150, there's the 15. So now we're saying, oh, wow, look, I reconcile. It's down to zero. That means I'm good. But then we still have this issue. We're like, well, but what happened here with this 25,000? How am I reconciled without checking these two off? These two are checked off here. These two are not checked off. Well, what happened? Well, it's really because this amount minus those two amounts is the 25,000. In other words, why did we have 25,000 in our trial balance? It's because our book balance was correct, but the bank balance had the 30,000 beginning balance, and then these two outstanding items that are now clearing in the current time period. So we could just simply reconcile and write that down and note that, but we would like to actually check these two things off. So even though they were in the prior system, in other words, we entered these in the accounting system in the prior system, prior to the cutoff of January 1st, 2031, they cleared in the current system. They cleared while we're working here. So I'd like to actually enter these into my accounting system as of prior to the cutoff, change my adjusted balance, my beginning balance number, so that it'll net out to that 25,000, and then I can check these off. So that's what we'll do next time. I'll show you how we can do that. So rather than just simply reconciling here and noting that down, that is the difference. I would like to actually physically check off those two items to show that they have cleared. And so we'll do that next time. So before we reconcile. So I'm going to go ahead and leave now, and we're really close. So we're going to continue on with that next time.